Hello everyone. Today I will discuss about the overview of a broad map of investment management. The main outline of the investment management is your investment alternatives. What are the various alternatives you have? Investment attributes, then investment versus speculation, financial market, portfolio management process, approaches to investment decision making, common error in investment management, qualities for successful investing, and three approaches to successful as an investor. Investment alternative. Investment avenue is a very important and financial derivative. So in this, how it is non-marketable financial asset if you have, so it is with the equity share, bond, money market instrument, mutual fund schemes are there, life insurance policies, real estate, and your precious object. So these are the alternatives is there. Investment attributes, in that how you will get the return, how you are able to minimize your risk, for that various techniques are there. Then liquidity of the stock, then tax shelter and convenience. So evaluation of various investment avenue, that is based on your return. So that is here like return, then your what is your current yield, capital appreciation, then in this equity share, so it is a currently is low, so capital appreciation will be what, high. Then non convertible debentures is, if it is high, then capital appreciation is what, negligible. What is the risk in equity share? So it will be the like a high risk when, if the marketability liquidity will be fairly high, tax shelter high, convenience high. So non-convertible, what are the things? So here, if we have a different evaluation avenue, it is the equity share, non-convertible debenture, equity scheme, debt scheme, bank deposits. So bank deposit currently will be like sometime moderate. So capital appreciation will be like nil. Then risk is not there. So it is like liquidity highly liquid, so convenience is a very high. Then PPF, that is the government having the public provident fund. So in that, uh, what is your convenience? It is very high. Tax shelter means you are getting rebate in ATC. Then life insurance policy, again you are getting rebate in ATC. So in that also convenience is high. And residential houses if you are taking, so for that actually it is a convenience is fair, but you have to pay tax. And then again what, gold and silver also, there is no tax. So here also convenience. So these are the various evaluation of various investment avenues. Investment versus speculation. So investors and speculator, that is a very important key. Who is the investor? Based on the equity, but speculator, they are able to take the risk. So planning zone is for the investor, it is like a long, but speculator based on the market condition they will sell and buy, and they are buying from one market in a lower price and selling in a higher price based on the news. Risk deposition is again for investor it is moderate, and speculator it is high. Again written expectation, investor it is moderate, and for speculator it is high. So how you will take the decision? Basic for decision is, that is for investor, we are checking the fundamental of the company. On the basis of that we are able to invest, and we will decide our key, like it is for the 2 years long term, it is short term, or medium term, based on that. But basis of for the decision for the speculator, based on fully it is technical analysis ki what is the RSI index, what is the DEMA 20 DEMA, what is the 15-minute chart. So all it is based on your speculator are doing based on the technical analysis, but investors are doing based on the fundamental of the company. So leverage, for the investors there is a no leverage, but for a speculator it is a high leverage. Then again classification on of financial markets. So nature claim, like it is a debt or equity market. If you want maturity of claim, so money market and capital market. Money market is a short term market and capital market is a long term market. Money market means less than 1 year and capital market is more than 1 year. Seasoning of claim means primary market and secondary market. Primary market like IPO, it is a new issue market. Secondary market is already like a stock if you're trading in the exchange. So that is a secondary market. Timing of delivery, cash on spot market, forward or future market. Here you will sell and you will get the money, so that is on spot. But forward and future, it is based on the forward market and future based on the today's price, and tomorrow when you are selling based on that time delivery. Organizational structure, it is like exchange traded fund and over the OTC counter. So portfolio management process based on your specification of investment. What is your objective? It is a short-term objective, long-term objective. Then what kind of asset mix you are taking, formulation of portfolio strategy, selection of securities, portfolio execution, portfolio revision, and portfolio evaluation. So this portfolio management process is very important. It starts from objective, what kind of asset mix you have, how you are making your portfolio strategy on the basis of what you are buying, selecting of the security. Then you have to execute. After execution, you have to revise time to time where you are getting the much profit, where it is less. Then you can shift in different market. Then again portfolio, after that evaluation. So approaches to investment decision making is your fundamental, psychological, and academic. So based on market price, index, then random walk, positive link, that are the things. What are the common error in investment management? See, investors appear to be prone to the following errors in managing their investments: inadequate comprehensions of the return and risk. Then they have to check that how much return I will get, how much risk is involved while getting that much of return. Then how you have to formulate, then again native extrapolation of the past. You have to make a decision making power, stimulation switching, how you are selecting the stock, how you are able to diversify, you are taking over diversification or under diversification, buying shares of familiar companies, wrong attitude towards loss and profit, tendency to speculate. So quality of successful investing is what? Your thinking power, contrary thinking, patience. Okay. Then again, composure, flexibility and openness. How much and how you are able to take the decision. So three approaches to successful as an investor is your psychology difficult approach. Then again, intellectually difficult approach. Then these are the given that ki who tell that ki Peter Lunch ki flexibility and everything is given one by one, all the different approaches, that is not much required. Psychologically difficult approach, again developed by the investors policy, adhere, do not forecast stock prices, all that. Because your target is very important. With before investment, you should think about ki why. So if the that's why in investment management you have two things: fundamental analysis and technical analysis. He fundamentally talk how it is company is doing, industry is doing, and in the technical analysis based on chart, graph, bar. So in the technical analysis, when we'll talk about micro dot theory, also we are following key market is going upward trend, downward trend, or sideways movement based on the news. So that is a basic for investment management. So I am summing up the session. So in this actually, what main thing ki how you are selecting your investment avenues, what are the investment avenues are available in the market. And for evaluating an investment, the following attribute relevant, that is your rate of return, risk. For that risk, if you're calculating, it is a standard deviation method, or it is a your covariance correlation method, how you are maximizing your return and minimizing your risk. And if you are having a corporate valuation, in that also you should know ki I am selecting based on my NPV method, or I am selecting based on my company's NOPAT, EBITDA I know, and the basis of that I am selecting the portfolio. So all that is important. So financial market is a market for certain and exchange of financial asset creation. And financial market can be classified by the nature of claim, maturity of claim, seasoning of claim, timing of delivery, and organization structure. Portfolio management is a complex activity which can be broken down into the series of steps, and there's investors diverse in the various investment strategies. Investors are prone to the various errors, and the quality is there. So this is all about the investment management. So investment management, for in today's scenario, everyone doing, and they have to plan ki it is my for short term, it is for the long term, or it is for the medium term. What are the techniques, fundamentally how you have to select the stock. Like if I will tell ki now in upcoming in India 5 to 7 years, energy sector is a booming sector, green energy, then your power sector will be boom, then infra will boom. So these three things is a predicted key: infrastructure, your IT last 1.5 years is not developed, so now it will be the time of IT. So infrastructure, then your IT, and then your power stocks and energy sector will do. So how you will plan your investment and how you are able to select the stock. So that is very important ki how you are diversify your portfolio, how you are managing your portfolio. So this was the first class. Next class again I will come with one more topic. So thank you for watching my video.